Hi, this is P R Sundar. Welcome to this special episode where I am going to talk about the future of stock market over a period of next few months. I came out with a video, IT stocks likely to do well going forward, HDFC group stocks likely to do very well. And now in this episode, I am going to talk how Nifty potentially can reach 20,000 in next 3 to 4 months. And what are the reasons? That's what we are going to look. Number one, I've been only a fundamental person, not a technical person, but now I am inclined to look at technical analysis also. So the people ask me, sir, how come you change from fundamental to technical? I used to tell them, no, I'm neither a fundamental guy nor a technical guy, but now I'm a techno-fundamental guy. I look both technical and fundamental. The first, let us look at the fundamentals. Number one, Nifty hit all-time high this week, but well before this, Bank Nifty hit all-time high, mid-cap index hit all-time high, Sensex hit all-time high, and so on. So Nifty hit all-time high last. Why? Main reason is that the broader markets were doing very, very well, but index heavyweights, TCS and Infosys, due to the negative news flow regarding IT industry, both TCS and Infosys down 20% from their respective all-time high, and Reliance is down more than 10% from their all-time high. And ICICI Bank has been consolidating, but HDFC Bank and HDFC in a 3-year time frame also, they've been doing very badly. Ever since the merger issue came, so it is, had been underperforming. And now the HDFC merger will be finally be over by July, so that hangover may be over. So there's a possibility HDFC and HDFC Bank both can do well. The broader markets is already much higher than Nifty all-time high, and it's because of a huge underperformance by Reliance, TCS, Infosys, HDFC and HDFC Bank. So remember, these 5 stocks are among the top 7 stocks in India. So out of the 50 stocks, nearly the top 5 stocks, which has nearly 50% weightage, may not be 50%, maybe less than that. HDFC Bank and Reliance alone has got 25% weightage, these 3 stocks. When these huge weightage stocks are doing hugely underperforming, not to forget even Kotak Bank. And Kotak Bank has been trading between 1600 to 1800 or 1900 for many years. In between, a few occasions it went up to 2000 plus, then came down again. Now, let us say it's 1600 to 2000. And that is the range it has been trading for more than 2-3 years. When most of the index heavyweights are doing huge underperformance, yet because of the outperformance of the remaining stocks, the Nifty has hit all-time high this week. So there is a possibility that if these index heavyweights start moving, now there is an upgrade of ICICI Bank and HDFC Bank by S&P. So and all slowly, when good news comes, these index heavyweights start performing, who knows, Nifty can reach 20,000 in another 3 to 4 months. There is a possibility. And of course, from now until October, anything can happen. So what I'm saying is barring unforeseen circumstances, so there is a possibility Nifty can hit. And when I was discussing with one of my friends, he said, sir, 20,000, you are too ambitious. You please tell me, how is that possible? Then I asked him, okay, number one, I'll tell you this joke. When my son was 3 years old, I took him in an aeroplane. And how we go to aeroplane, especially in the night time, we don't get to see the aeroplane. We just go through the aero bridge from the lounge, and then we straight into the aeroplane. So my son was sitting in an aeroplane, but he doesn't realize that he is sitting in an aeroplane. Through the window, he saw another aeroplane. He started shouting, Daddy, Daddy, you see the aeroplane. And I told him, you are already sitting in an aeroplane. So many times when we are inside, we do not look at the larger picture. Only when you look through the window, another aeroplane only you see the picture, whereas you don't see the picture of your own aeroplane where you are sitting. So that is why most of the people who are inside the stock market and they are not able to see the overall picture of the stock market. So I told my friend, look, 2021 October, Nifty was around 18,600. Now, let us say it is 19,000. So in 2 years, Nifty has given 2% return. If you take 2021 October as the starting point. When an index has given 2% in 2 years, why not it give 5% in next 5 months? 5% in 5 months is not a big deal. That's an annualized return of 10%. At 10% in a year is just a very reasonable expectation in a bull market. So if you take that, so June, July, August, September, October, 5 months, if Nifty shoots up by 5%, from 19,000 to 20,000, it's only 5%. So there is a very much possible. And then he was convinced, yes, it is possible. Fundamentally, number one, for the last 2 years, we have been underperforming in any rolling 3-year or 5-year period. So we have done better than the bank FD return. Stock market returns have always been better than the FD return. That I already mentioned in my videos while talking about IT stocks and HDFC group stocks. Number 2, look at the short term, year to date. From January 1 until June, the first 6 months. In first 6 months, if I am not wrong, we started somewhere around 18,200 first week of January. And now it is about 19,000. So which is roughly about 4%. So in the last 6 months, we just got only about 4% return. Whereas look at the other markets like US markets, Japanese markets, so many other markets have delivered about 8 to 10% return. Global markets where, developed markets where the rate of interest or return on fixed deposit is very pathetic, 0.5% or 1%. There the stock markets have given 8 to 10% return. Look at the Nasdaq, very impressive. I think since January it has given more than 25% return. Last 6 months, in fact the first quarter, we have hugely underperformed the world markets. In the first quarter, we have given negative return compared to 7-8% return by the major global markets. Probably that was due to the Hindenburg, news about Adani, the volatility induced by Adani stocks and this and that. But now when everything is settled, and the second quarter, we have actually outperformed the major markets. But still, on a standalone basis, so from January to June is just 4%, which is annualized about 8%. 8% is not a big deal. It's just, it's equivalent to FD return. Therefore, if global markets do well, like American problems are getting lower and lower, their inflation is getting lower, but still European inflation is slightly higher. So going forward, if everything goes well, by October, we can reach 20,000. So that is a fundamental part of it. Now, coming to the technical part of it, so look at the chart here. Here I am showing you a chart. There you see the 2 lines. One line I am using super trend 21. The second super trend line is 5-3. So first thing is that why did I choose 20 days and 5 days? Okay, it's a daily chart. Approximately there are 20 trading sessions in a month. So therefore I choose the super trend 20. That means you can say monthly trend line. Because even in a bull market, the market doesn't go straight up. It goes up, then come down, again go up, little come down, Therefore to study the trend, you need to have at least 2 lines, one short term, one long term. So the super trend 5 I have chosen because it's a weekly. So I'm taking 2 trend line, weekly trend line and monthly trend line. So if both are bullish, the market is bullish. If both are bearish, the market is bearish. If you look at the last 3 years, and I just go back. So this is a post-coronavirus. There was a huge uptrend. You can see from almost 11,000. So it was a straight up, and there was a small dip, again straight up. There was a small dip, again straight up. It has shot up to nearly 18,000, from around 10,000 to 18,000, which is about 80%. It's a continuous. But post that, if you see, this is a downtrend because both red lines means it's downtrend. So they see this downtrend lasted only few weeks, started in October and then ended in December. It's October, November, December. So less than 3 months. Then again uptrend started. just lasted only few weeks. Again downtrend started, lasted few weeks. Again uptrend started few weeks, downtrend started few weeks, uptrend started few weeks. So I studied this chart. So as per this chart, if an uptrend starts, maximum it lasts 10 to 12 weeks. And by that time, the downtrend again starts. Once the downtrend starts, again it lasts maximum 10 to 12 weeks. And within that time frame, markets turns around, uptrend starts. So that has been the year except post-corona. Because during coronavirus, markets fell so much, so naturally it will shoot up. Now, if you look at the last 2 years trends, every time the trend lasted only maximum 10 to 12 weeks. But this time, the uptrend started, it is lasting for more than 12 weeks. So sometimes in the month of April, first week, it started, the uptrend started. Now April, May, June, 3 months is over. So we are coming into July expiry and still the uptrend is intact. And you can see the 2 green line continues. In the past, okay, if a trend sets in and if it lasts more than 3 months, and definitely the 4th month and 5th month, the rally was too big. And in fact, that kind of rally has actually happened only post Lehman Brothers collapse and post coronavirus. But we can say this is a post US inflation period. You know, we had a lot of problems with regards to inflation in the world. So we can say this is a post inflation rally. So there's a possibility that the next few months can be very bullish. Okay, it doesn't mean that market will, like sometimes, you know, some people misinterpret my words. So one guy said, sir, you said market will be moving up and now market is down today. I said, yes, I said markets are bullish for the next few months. But did I say everyday market will go up? He said, yes. Sir, you said everyday. If everyday market will go up, then, you know, who will be the seller? The market, you know, sometimes can go down, can go up, but over a period of next 2 to 3 months, so there is a possibility that Nifty can reach 20,000. Now, the next question, what is the point of saying 20,000, 21,000, you know? These are all the job of, you know, horoscope people. But what are we going to do? So, in fact, one of my friends asked me the same question when I was telling him about 1 month before. So, I just gave him a strategy. So, I'm just giving a view and you have to decide what risk you want to take and what is the reward you want. So if you want, I can give you one simple suggestion. Okay, you go and sell 20,000 put option in July series and buy the same 20,000 put option in December series. And I can show you the strategy in the Optra as if I have taken the trade on 1st of June. If 1st of June, if anybody has done 20,000 put in July, sold 20,000 put bought in December. First look, the probability of profit is 70%. Maximum profit is 23,000 rupees, which is almost 55% of the margin deployed. And maximum loss is 3,000. But actually this is wrong. This is not the maximum loss. This is the maximum loss. No, if you square up the position after 1 month. That is beyond the scope of this video. I will tell you the maximum loss will in this strategy will be roughly about 3,500 to 4,000 rupees every month. That means you are taking the buy position in December, the sell position in July. If suppose Nifty does not reach 20,000 by July, you will have to square it up, you will have to roll it over to August. By the end of August, if 20,000 is not reached, you have to roll it over to September. Like that, when you do, every time you roll over, there will be a loss of about 3,500 rupees. Assuming that July, August, September, October, November, about 5 months. So 5 months rollover charges, you know, let us say 4,000 rupees. So that means the maximum loss in this up to December, if you carry, the maximum loss in this strategy will be 20,000 rupees. So that is your highest risk. But look, what happened exactly after 1 month? Exactly after 1 month, there is a profit of 6,000 rupees. So that is about 15% return on the capital deployed. And not only that, in Opstra, the margin shown is not accurate. Why I say it is not accurate? Actually, this is the margin you require when you place the order. So this is the margin you require when you place the order. The next day, this amount will be given to you as a credit. So this is a credit strategy. So that means 42,000 or 43,000 rupees you pay today, and tomorrow the 10,000 rupees will come back to your account. So if you minus that, effectively your effective margin is only 33,000 rupees, is not 43,000 rupees. So Opstra shows the total margin, and this is the gross margin, not the final margin, net margin. Net margin will be 43,000 minus 10,000. So when 33,000 rupees and there is a profit of 6,000 rupees in 1 month, so that's almost 20% return on capital employed. On the other hand, you can see here the maximum loss is 3,500 rupees. That's for 1 month. Okay, this is a loss per month. So 1 month is over. So in 1 month, your maximum loss is 3,500, but you have already got a profit of more than 6,000. So that means, the risk reward has become 1:2. For every 1 rupee risk, you got 2 rupees reward. Now, why I am discussing this? Many times people always ask me, sir, India VIX is so low. When India VIX is so low, the premiums are very, very low. When the premiums are very, very low, the VIX can shoot up anytime. So if you look, suppose you are taking a bullish view and you are going selling an 18,500 put option, naked put option. Number one, your margin money is about 83,000. So margin money, is very, very huge. And then premiums are so low. In case market reverses, your loss is unlimited. So loss is unlimited. Premiums are too low, and then margin money is very high, right? If you are bullish, it doesn't make sense to sell a naked put option for all these drawbacks. Low premium, and if VIX shoots up, you will be in trouble, and unlimited loss and huge margin money. But whereas instead of selling a put option, if you do a put calendar, this is called a put calendar, the deep in the money put calendar, and then if market goes down, your maximum loss is limited to about 3,000 plus, and then margin is very low. So your risk is limited, no unlimited risk, and margin is too low. So even you get small profit, the return on your investment is very good. And in case, who knows, if the market is trending, market going hugely up, there will be a very good profit. In fact, I talk about this strategy in one of my YouTube videos. I don't remember it was pre-market report or post-market report. And many people started asking some, sir, give us more detail. That's why I've come out with these details. So hope you enjoyed watching this video. Thank you for watching.